Good day. I am Elissa van der Westhuizen from the Accounting Standards Board. This is a short recording to help you to learn more about preparing financial statements in a way that meets users' information needs, and also what to do if specific users require more information. Just our standard disclaimer that the views and opinions expressed in this presentation are those of myself. The board does follow an extensive due process to reach certain conclusions. So let's start with the purpose of preparing financial statements. Why do we prepare them? I'm going to do this in a bit of a quiz style. So firstly, is it because legislation requires entities to prepare financial statements? Is it because the auditors need the financial statements so they can do their bit and audit? Is it because users have certain information needs and we need to meet those needs? Or does an entity reward performance of its employees depending on the information in the financial statements? There could be other reasons. These are just a few that I came up with. So let's look at each of them. Although legislation does require entities to prepare financial statements in terms of the GRAP reporting framework and the conceptual framework, this is not the primary reason for preparing financial statements. It's also not because auditors need information that's in the financials or they need to do their bit to audit the information. But it is because we do need to meet users' information needs, and this is the primary objective of preparing financial statements. So also definitely not to measure an entity's performance rewards to its employees. This may be another way that the information is used, but that is not the primary objective. So a key part of understanding what information entities should provide in their AFS is, of course, understanding who are these users. So this is explained in quite a bit of detail in the conceptual framework, and I would urge you to have a look at that. So let's start with what general purpose financial reports are. So these are financial reports that are intended to meet the information needs of users who are unable to require the preparation of financial reports that are tailored to meet their specific information needs. So this term that we use, general purpose financial reports or GPFRs, they do include the financial statements, GPFSs, and therefore they have the same users as the general purpose financial statements. So some users of financial information may have the authority to require the preparation of reports that would be tailored to meet their specific information needs, while this group would find the information in the GPFRs or GPFSs probably useful for their purposes. The general purpose financial reports are not developed to specifically respond to their particular information needs. So who do we then have in mind? In terms of the framework, there are two key groups. And firstly, it's the service recipients. So those that receive services from the entity. They may have representatives, maybe civil society organizations, or those that have been elected to represent them, a council member maybe, or something similar in other levels of government. And then also those that provide resources to the entity. So this could be in the form of paying for services or paying taxes or providing a loan or a donation. And they could then also have representatives. So these broad groups are who we consider to be the users of general purpose financial reports. So that also means that it is not the auditors. Just to clarify that, the auditors have an important role to play in making sure information that is provided to users in the financials is reliable and credible, etc., but they do not serve to be the primary users. So how would it be possible for an entity to meet users' information needs? It's quite simply apply the standards of GRAP. So the board does consider information needs of users when they develop each and every standard of GRAP and develops the standards in that way. And then what would be left for the entity to do would be keeping with the objectives of each of the standards. So you would know that we start each standard with an objective, and we often in the disclosure sections have objectives that may sometimes require you to add a bit more information as opposed to what we require by the standards. But if you apply the standards to your own context and you apply your own materiality, then you would be meeting the information needs of your users. So this does mean that it's entity specific. One user group is not necessarily the same for one entity compared to another, and materiality differs, the entity's context differs. So it's very important that your financial statements tell your story to your users. So I think then what is the challenge? I think what we've heard from entities and even directly sometimes from users is that they may communicate a broad range of specific information needs to the entity. So this may be for information that may be linked to the financials, but not specifically required by the standards of GRAP, or it may be required by GRAP, but it's not considered to be material in that entity's circumstances, and also not necessarily information that is needed by a broad group of stakeholders. So the users of FSs and FRs that we explained earlier on. So for example, maybe a loan provider may require an entity to report detailed information on what the loan was spent on, or an entity's oversight structure may require detailed information on the entities that were transacted with in that year. So who were the counterparties to the entity's transactions? So this extra information, therefore, would not meet the qualitative characteristics in our framework and may not be suitable for the financial statements. Yet there is this user information need to be met. So to overcome the challenge, there is basically the key thing to do, and that is when reporting information in the financial statements, keep to the purpose of the financial statement. So don't add extra information because a specific user wanted that. Then what to do about that is report those requests and the other information outside of the financial statement. So depending on what this is, this could be an annexure outside of the financials, maybe part of the broader annual report, but remember still GPFRs have the same users as GPFSs. And then another way would be to just report it directly to that user that asked for that information. So let's lastly look at a quick example. I think from the slide we had earlier on who the users are, they are those who are unable to require the preparation of financial reports that are tailored to meet their specific information needs. So in this case, entity A provides aggregated information on its employee benefit expenses in the financial statements, and this is aligned with GRAP as well as the entity's own materiality. Then the entity's audit committee requested more detailed information on this expense because the audit committee would like to interrogate this information to assess how the entity manages its employment and performance management practices. So what does entity A do? Firstly, the entity considers whether entity A's audit committee would be a user of the general purpose financial statements. And when looking at who we describe as users, again, this would not be considered a primary user of the financial statements because they do have the authority to require the preparation of reports that are tailored to meet their specific information needs. And that is exactly what they have done in this case. So because of that, the entity would not amend its financial statements to add this information into the financial statements, but rather prepare a separate report for the audit committee with this specific information that they had requested. Thank you very much for watching this recording. I do hope that you found it useful. Please subscribe to our YouTube channel to be notified of similar recordings, and there are other means that you can get in contact with us on the slide for your information. Thanks very much.